Welcome to the Techno Fundamental Report for August the 3rd. You know, there's no such thing as a free lunch, Milton Friedman. We all want to invest in a way where everything makes us comfortable and we don't have to really think about anything. That would be really nice, but it's just not reality. And when it comes to the market and trying to make decisions, some people just, you can lead a horse to water, but you can't make it drink. It's just a matter of getting past certain fears and moving on. So the time has come, the walrus has said. So to be outstanding, get comfortable with being uncomfortable. And it's just a fact of life. Now, one of the factors that is pointed out in this book here by William O'Neill is that PE ratios have been used for years by analysts as a basic measurement tool. Now, you might want to pause your video player and read this section of the book, but basically what it's saying is that there's no simple academic answer here. I mean, basically a PE multiple is nothing more than a price of the stock divided by its earnings, and somehow that's supposed to mean something. And I've learned this the hard way. I can remember back in the 1980s, early 80s, late 70s, a friend of mine, Hank Corbin, and he was with a company out of Little Rock, Arkansas, Stevens and Company, and they were the investment bankers for Walmart out of Bentonville, Arkansas. And he told me that I should really take a serious look at Walmart. Well, I didn't, because the PE multiple was too high. So in other words, what happens is you get hung up on these particular numbers and you can really make some mistakes. Now, this book here also is called The Outsiders. Now, what's interesting about the book is it's about CEOs since the 1950s that had exceptional results. And the way they determined which CEOs had these great results was by the price of their stock, the performance of their stock. So, in other words, price momentum indicates stock price strength. So in other words, when you hear about price momentum, sometimes it's kind of controversial at times, but it really is the way to find the best opportunities. Like, for example, this study here done by J.P. Morgan. This list, again, you might want to pause your video player and look at this list. This is a list of approximately 200 companies that were called mega winners. I mean, we're talking about Amazon, we're talking about Walmart, McDonald's, so forth. So this list was determined from a 3,000 stock index called the Russell 3000. And these companies had to have price performance that was substantially higher than the index. In other words, it was 2 standard deviations above the index. This group of stocks, which is roughly 200, were what drove the returns on the 3,000 stock index. And it's also important to note that roughly 50% of the stocks since 1980 was when this study was done, 1980 to 2014, approximately 50% of them went down more than 70% and basically never came back. Now, we're starting to see some negative action in the market. It's looking like a correction. We've had a really, really nice rally. I think the culprit is interest rates. I mean, this is the power index. Basically, what we're measuring here is the price movement of the 5-year U.S. Treasury yield over the last 125 days. So you can see when it gets back above zero, that's a negative. So I believe we're also in earnings season. I'll tell you a quick story about earnings season, because earnings season is, you're going to have a lot of cross currents. You're going to have a lot of volatility. And we're right in the middle of it as we speak. There was an analyst one time went to a meeting. Let's say the company was XYZ Corporation, and the analyst asked the CEO, he said, how are things going? And the CEO said, oh, I just couldn't be better. Well, the analyst runs over to the phone bank in the room and calls his trading desk and says, sell all the XYZ. And the CEO asked him, he said, wait a minute, I told you things couldn't get better. And he said, that's what I know. You said things couldn't get better. So I sold. So earnings season can be very tricky because the market is taking that report and pretty much extrapolating the future from it. And if the reaction of the stock is poor, you should heed that. Now, back to interest rates. This is the 20-year Treasury. You can see what's going on here. This is the price of the TLT, which is the 20-year Treasury bond. You can see it's really breaking down. So the market is basically saying interest rates are starting to head back up again. Here's the utility index, which is an interest rate sensitive group. You can see how it's also been breaking down. Here's the three economic indicators. You can clearly see what's going on with the 10-year Treasury. We're back up to a pretty much a high level here. We really don't want to see that yield up in here, but the trend right now for interest rates, it seems to be higher. Now, oil's also broken above the 200-day moving average, so we're starting to see an oil price increase. Financial stocks are still continuing to be in an uptrend, however, somewhat of a correction in here. Now, I wanted to talk about the Copic Index. We got the buy signal. It's a positive 9.37 on the S&P. Now, realize the Copic curve is not designed to, say, be a buy signal. It's designed to say the low is in. In other words, here we have the low is in, here we have the low is in. Now, the calculation has to do with human behavior, which is in time. And you can see here that we got the buy signal. Now, this particular Copic curve is only updated on a monthly basis. So we just turned the page on the month. Therefore, we got a breakout above zero. So we actually have the buy signal on the Copic curve as well as on the NASDAQ. In fact, the NASDAQ has got a reading of 10.61, which is basically saying this low is the low. So hopefully it's not different this time. Again, I wanted to point out about oil prices. You're seeing a move up on our trend meter. You can see that we're barely moving into the green, but we're definitely seeing some improvement in oil prices, which can be a negative. The aggression index kind of pulling back here. We're seeing somewhat of a correction in here. However, the aggression index has had a tremendous rally. Probably needs to cool down. I would really like to pretty much see a little bit of a consolidation here within an uptrend. Okay, the NASDAQ, just to look at a couple of the indexes, you can see the NASDAQ is pulled back to the 25-day moving average. Not in trouble. The lower moving average is still in an uptrend. You can see here on the 200-day moving average, both the NASDAQ and the S&P are basically still in uptrends. A simple little pullback. No big deal yet. Hopefully it doesn't get any bigger. Now, I wanted to talk a little bit about electric cars. This is Li Auto. This is a Chinese car manufacturer. We do own the stock. It's been an excellent performer. You can see the price momentum, what we talked about earlier. You got a confirmation here with a big volume gap, and the stock's been an incredibly strong uptrend. What they have that's unique is they offer, first of all, the cars are absolutely beautiful. These cars are luxury cars. They're basically going after BMW and Mercedes, that level. And they have a feature called extended range. In other words, the hybrid electric car sure makes a lot of sense to me, basically because of the environmental impact of making the large battery pack. If you make a small battery pack, less environmental impact. And, the average driver drives 33 miles a day. So if you have a battery pack that'll go 200 miles or 100 miles, that's really all you need. Now, this company, to get the extended range, has a generator on board that actually, generates electricity to recharge the battery pack as you're going, if you're on an extended trip. However, it has about a 200-mile battery pack for just around the city type thing. Now, one other one I wanted to mention is Toyota. We do not own Toyota, but I'm keeping an eye on it. They have announced that they have a solid-state battery. Now, solid state is kind of like what you use in pacemakers and things like that. They're it'll be a game changer. So keep an eye on Toyota. The news should get interesting here about solid-state batteries. The bottom line here is, to me, is that Tesla, who really started this whole EV movement, has got a lot of competition. It's just, especially the Chinese. The Chinese are coming on very strong here. So if you have any questions, please let me know.